What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at CELH Holdings stock, ticker symbol CELH, on a variety of time frames in anticipation of the next trading day, Monday, March 4th. Well, CELH stock on Friday finished the day down $2.35 a share, minus 2.88%. However, of course, that comes off the back of that pretty substantial move off of earnings. So let's take a look here at this one here today. If you are new here, by the way, please subscribe to the channel. My goal is to hit, it's a pretty bold goal, but I'd like to hit 5,000 subscribers by market open on Monday. And I think we can do it with your guys' help. So please jump aboard, happy to have you, and I'll continue to provide value. First of all, just want to take a look here at the stock. It is down about, 25 cents a quarter or so after hours, at least as of the recording of this video. Listen, as always, you will commonly hear me say this. After hours movement, you have to take it with a grain of salt because look, there's almost no volume, right? If you've ever traded a stock after hours, you know what I mean. It is so easy for stocks to get moved in the after hours. It is almost scary. So if the volume is not present, which is going to be the case on 99% of days, you have to take that movement with a grain of salt, whether it goes against your current sentiment or it's confirming your bias. Let's move on here to the 5-minute chart and do our kind of daily volume profile analysis ritual. And take a look. What we're looking for here is obvious changes in volume that correlate with bigger moves in the stock price, but we have to look at that through the lens of the context of time of day. So what I'm going to do here is I'm actually going to cut out that little after hours, big volume. It's likely, even if it's not, whatever, but it's likely to be a data error there. What a lot of people don't realize is that as far as data getting fed to brokers, there's essentially, dare I say, almost like a monopoly in terms of data providers for like Wall Street products. Okay, there's a few data providers that everybody buys from. So when one error occurs, it gets pushed to many different places and then everyone thinks it's like a real thing going on. Oftentimes it's an error. So looking here at a few of the more obvious moves, I'm looking at kind of this like pump upside and then fade. That to me is pretty contextual for time of day. Understand that we did see on this little bit of fade here in the early afternoon or more midday, we did see a little bit of increased volume. So bulls, understand that you're going to see some bears in chat rooms likely over this weekend looking at that and saying, wow, did you see that higher volume dump off we saw midday? Truthfully though, we did see a little bit of a recovery, that it recovered the majority of that dump off into the close, and that was on pretty contextual volume. However, some might argue that you wouldn't expect that volume increase to happen until after these three candles. Fine. I'm looking at the volume profile on this 5-minute chart on a CELH from Friday as interesting, but honestly kind of a wash. So let's move on here to the 30-minute and take a look at levels that I'm paying extraordinarily close attention to come Monday. So you can see here on the 30-minute chart, guys, that 50-period moving average, and by the way, I'm just using the most psychological, self-fulfilling prophecy indicators we can possibly utilize, because that's what I believe as an analyst. I believe that the entire market, all the charts, it's nothing more than psychology, right? So the only reason I'm interested in indicators at all is because the majority of market participants are using a select few. So I want to utilize those and really only those. So I have the 200 period and the 50 period, the gray line and the white line respectively. On the 30-minute chart, that 50 period is going to be relatively quick to react, and you'll typically hear me say that when we have big moves like this to the upside, I want to see some psychological barriers get feet up underneath the stock as quickly as possible. And you can see here that this 50 period on the 30-minute chart made light work of that move, got upside. We essentially respected it as kind of a sloppy support level here today, heading into the close in the late afternoon. In the after hours, listen, we have given it up. I think that's more that the 50 period is just moving upside so aggressively, and it just kind of went over the stock rather than the stock actually giving up the moving average. But I mean, come Monday, if I'm a bull, ideally, since that 50 period has now gotten above 80 bucks a share, I would want to see CELH get back above that 50 period here on the 30-minute chart. If you're a bear, on any single retest at all of the 50 period, you want to see a hard high volume rejection back down toward the downside. Okay, let's move on now to the 4-hour chart. This one's going to take its time as far as the indicators are concerned. You can see here that the longer time frame you go, the slower they are to react. So I wouldn't say it's incredibly relevant in the near term, just be looking at the 50 period, but on the 4-hour chart, I always have to look at it. Bulls, you ideally wouldn't want to see a retest, right? But what I'm really looking at from a bullish perspective is just to see that 50 period moving upside as quickly as possible, understanding it's going to take some time, but just as quickly as possible, getting back upside, getting feet on just another psychological barrier, right? Up underneath this recent move. If you're a bear here looking at the 4-hour chart on Celsius, you would ideally want to see that 50 period start to flatten out and make this, quote unquote gap as wide as possible to, I suppose, leave another factor of potential doubt in the bulls' minds. If you're a bear, right? That's what you're always looking for. Now, the most important chart of all on any ticker is going to be the daily. This paints the most clear picture, right? And if we're looking at this chart, what's the most obvious picture? Because that's the one I want to focus on, because that's the one that's going to have the most eyeballs. Well, to me, there are 3 levels to watch on the daily, most contextually, okay? And they're all the psychological round numbers. $80 a share, right, is number 1. If I'm a bull, I want to see a break and hold of $80 a share and claim 80 as support, okay? Ideally on as much volume as possible, make our way up toward that intraday high of 85.56, right? 85 kind of being that target in the short term if you're a bull, but 80 being that kind of necessity. You want to see that hold. Bears, obviously any test of 80, you want to see a high volume rejection, get back down towards 75, because ultimately in the near term, your goal, I would think, is to crack down back below at least $75 a share. All right, that's what I'm looking at here on the daily on Celsius. Implied volatility, highly crucial, especially if you're trading options, but even if you're just interested in the stability of the name. Of course, we got big IV crush after earnings, that's not unexpected, right? That's actually very, very common. Went from about 79% down to sitting at about 58, 59% here into the weekend. Just understand, the lower this comes, at least compared to your intended trade time frame, right? That's very important. The lower this comes compared to its historical self, the more favorable conditions become for options buyers to purchase new contracts, right? Looking for kind of a return to equilibrium in IV, which directly benefits those purchased contracts. And even if you're just holding the stock, implied volatility as it comes lower, typically options traders are pricing things in as being less insecure about where the stock currently is at current levels. So if the stock is higher and you're a bull, ideally you would probably want to see IV coming lower, because options traders are kind of accepting it as more stable up in that region, pricing in less expected volatility, right? Now, let's take a look at the options chain here on Celsius from Friday. So we had 101,000 total contracts traded. That's actually not so bad. You want as much volume as possible here in the chain because it gives you a better sample size of data to work with, right? Because we're looking to try to pull out some bias here. So we had about 70,800 calls and about 30,300 puts. So we are seeing a relatively heavy, more than double call side bias on the overall call put ratio, which is interesting. And if we break it down by time frame, you can see here that not only is every single delta range leaning to the call side, every single range that's out of the money, at the money, and in the money, right? On average, it's going to be shorter term sentiment, more midterm, and longer term sentiment. But what I really like to look at, since these videos are primarily focused on the next trading day, is that 0 to 20 delta range. Those are those short term speculators. So we had 25,000 calls and about just under 15,000 puts in that range. So not only are we seeing on average the short-term speculators leaning to the call side, but we're also seeing a relatively heavy overall call bias on the call put ratio. Listen, as always, it's just one factor of many, so make sure your risk is managed. And hey, if you got value out of this video, please subscribe to the channel. Again, trying to hit 5K subs by market open on Monday. Appreciate you, and I'll see you next week.